Remember Beyond Meat, the company that was supposed to be the future, the one that was going to completely change how we eat? Well, now it's fighting just to stay alive. This is one of those wild stories, a spectacular rise, an absolutely crushing fall, and now a last-ditch pivot that's either going to be a work of genius or a total flameout. Let's dig in.
So check this out. This chart is basically the whole puzzle of Beyond Meat in 2 simple bars. If you've held this stock for 5 years, you're down, wait for it, 99%. Ouch. But if you just jumped in over the last month, you'd be up almost 70%. So what on earth is going on here? This isn't just normal market volatility. No way. This is a fundamental war over what this company even is anymore. So you have to ask, what are we really looking at? Is this just the chaotic energy of a meme stock having its moment? You know, a dead cat bounce before it all goes to zero? Or is this the actual start of a real strategic turnaround? To even get a clue, we've got to rewind and understand what went so wrong in the first place.
All right, so before we can even talk about a comeback, we have to talk about the collapse. The hype around this company was just enormous, right? But when the products actually hit the shelves and the financials started coming out, well, reality hit hard.
And you don't have to take my word for it or Wall Street's word for it. The most telling diagnosis came from the CEO, Ethan Brown himself. When your own CEO says something like that, wow, that's not just market chatter. That's a direct admission from the top that Chapter 1 of the Beyond Meat story is officially over.
So why did the promise break? Well, it really boiled down to 4 big failures. 1, the price. It was just too expensive for a lot of shoppers, often more than actual meat. 2, the health perception. People started looking closer and seeing it as this ultra-processed food. 3, the taste and texture. For a lot of actual meat eaters, it just wasn't a good enough substitute to make them switch. And that all led to the biggest issue. By trying to be for everyone, they kind of ended up being the perfect product for no one.
But, hitting a wall like that forces a decision. Do you just fade away, or do you pivot? And I mean, pivot hard. Beyond Meat chose to pivot, and they've launched what might be one of the boldest reinventions in the food industry. They're trying to become a completely different company.
And this shift is fundamental. They're literally moving away from being Beyond Meat to just Beyond. Think about that. This isn't just about making a better fake burger anymore. No, this is about repositioning themselves as a broad, plant-based protein company and jumping into totally new categories.
So how do they pull this off? Well, the playbook seems to have 3 critical moves. First, they have to diversify into new products. Second, they have to reformulate their old stuff to fix those complaints about taste and health. And underpinning all of it, they have to cut costs. I mean, they've got to slash spending just to survive long enough for those first 2 things to actually work.
And look, these aren't just ideas on a slide deck. The playbook is already in motion. We're seeing it happen. They're diversifying with these new Beyond Immerse protein drinks. They're reformulating with new sausages that are hitting shelves nationwide. And on the cost side, they are making some drastic cuts, including a full retreat from the Chinese market.
Okay, so all of this action creates the central conflict for anyone looking at this company today. Is this a brilliant recovery in the making, or just a bunch of desperate moves? It's your classic bull versus bear showdown. The bull case starts right here, with execution. That plan to diversify isn't just a theory. It's a real deal with a distributor called Big Geyser that's putting their new drinks in 26,000 different spots in New York. That is a huge distribution win, and the first piece of real proof that they can actually break into new markets.
But for every bull, there's a bear pointing to this number, 70 cents. While everyday investors have been pushing the stock price up, Wall Street analysts on average think its fair value is just 70 cents. That is a massive disconnect, and it suggests the pros think this recent rally is pure hype with nothing real to back it up.
The bulls fire right back, though. They argue that those analysts are just looking in the rearview mirror. The new sausages and the new beverages are on shelves now. They say this proves the company is still an innovator and is successfully breaking out of that box the burger business put them in.
The bears, however, see that cost-cutting totally differently. They don't see discipline, they see desperation. Exiting China completely? That isn't a strategic trim. That's a full-scale retreat from what was supposed to be their biggest growth market. And it really makes you ask, if they can't win there, where can they win?
For the bulls, the light at the end of the tunnel is this number, a return to over 30% gross margins. Now that's an ambitious target for sure, but management believes their new strategy can get them there. And if they hit it, the entire financial story of this company changes overnight.
And the final bear argument, well, it's about confidence. One of the company's officers sold nearly 30,000 shares right in the middle of this stock rebound. Now, yes, it was pre-planned, but the timing just looks tough. When a top executive is selling a big chunk of shares during a supposed turnaround, it just makes you wonder how much faith the insiders really have in the long-term plan.
So with these two competing stories in mind, what are the key events that are going to tell us who's right, the bulls or the bears? Where should we be looking for the real answers?
So here's what to watch. Coming up in the second quarter, we've got the next earnings call. That'll be the first official progress report on this whole pivot. Then in Q3, we should see the first real sales numbers for the new drinks. That's a huge test. And by the end of the year, we'll get an update on whether they're any closer to that critical 30% margin goal. These are the moments where the hype is going to meet reality.
And so, we end right where we began. Is this a visionary pivot that's going to redefine Beyond Meat for a whole new era? Or is it a desperate last stand from a company whose time has already passed? The company has made its move. The market is going to deliver its verdict over these next 6 months.